Hi, everyone. Thanks for joining us today. My name is Brandon Ross. I'm the co-CEO and co-founder of Quotient Wealth Partners. Very excited to have our Director of Tax, Anthony Love. So, Anthony, tell us a little bit about Quotient's tax division and how we help our clients.
Absolutely. So today's client has the majority of their wealth saved in their company-sponsored 401k plan. And this is a great tool, but the majority of their wealth has not been taxed yet. Now, at Quotient Wealth Partners, we saw that shift coming, and we hired CPAs to work alongside our financial advisors. That allows us to seamlessly integrate tax planning into the holistic financial plan. And for those clients that have more than $2 million in our strategies, we take it a step further, and we will prepare and sign their personal tax return.
So you actually do tax preparation for some clients, is that correct?
That is correct, Brandon. For those clients that have a minimum balance in our portfolios, we will prepare and sign their personal tax return.
Great. Well, outside of just tax preparation, give us some ideas on how you offer tax planning advice to your clients on a day-to-day basis.
Yeah, I think there's two different client profiles I want to discuss with you. The first client is still working. And for those that are still working, we just want to talk about diversification. Are clients accumulating assets across the account types? Are they accumulating across taxable accounts, tax-free accounts, and tax-deferred accounts? And the second profile are those clients that have already retired. Now we can help them recreate the paycheck, but our advisors here focus on just this year and the long term. So not only this year, but the long-term plan. So if there's a tax bracket we should be filling up now in this low tax environment, we can do that.
That's great. So let's focus first on the pre-retiree. I know a lot of folks ask me, and I'm sure they ask you all the time, what's the appropriate way to save into a 401k? There's a traditional, which most people are familiar with, and then there's also a Roth 401k.
Correct.
How do you advise on which option someone should use?
Yeah. So we've had the traditional 401k since 1978. It's been widely adopted by today's employer, but it took another 25 years to offer the Roth 401k. Now the question is pretty straightforward. Which is better, traditional 401k or the Roth 401k? Well, the answer can be unique to each family. The traditional 401k is saving money tax deferred, so that will be taxed in the future. But the Roth 401k, you're paying tax right now today, but the growth will all be tax free. So the answer can be unique for each family. Our advisors know this question, and we will know your family and will help guide you through which is best for you, traditional or Roth.
And some people actually use a combination of both, correct?
It is possible. We like to say the law allows, but the plan administers. So, depending on your plan, your employer, you may be able to do both. Talk to our advisors. We'll know your plan. We'll know where you work, and we can help you determine if it's possible to do both, the traditional 401k and the Roth, or what we call the after-tax 401k.
Right. And then how about tax-efficient investing? We hear that all the time. How do you offer tax mitigation within an investment portfolio?
Absolutely. So, Brandon, for years, the mantra in investment management has been buy and hold, buy and hold. That simply just doesn't apply anymore. Today, we have the computing power to match tax gains with tax losses in the same calendar year. Investment managers here at Quotient Wealth Partners can help you do that, and we can do that at the account level. So this is going to maximize after-tax returns, and our clients love that for those taxable investments.
And then once people are transitioning from the workplace, they have to recreate that paycheck, as you always say.
Yeah.
How do they go about creating a withdrawal plan from their retirement assets?
Yeah, recreating the paycheck is our specialty, Brandon. So for those clients that are just now retiring, please contact us and let us help you. We can start to recreate the paycheck in a tax-efficient manner, but our advisors know how to look out on the horizon and forecast what will your RMD, your required minimum distribution, what will that be in the future? And then we can start to teach you the tax brackets, the 10% bracket, the 12% bracket, the 22% bracket, so on and so forth. We'll start to fill up those lower tax brackets now, and if we need to supplement the income, we can pull that from another taxable account. And if there's an opportunity to do a Roth conversion, we'll take advantage of that as well.